September 15th, 2008 changed everything. Lehman Brothers filed for bankruptcy immediately. $619 billion debt vanished. 25,000 employees lost jobs. Stock went from $80, fell to zero within hours. Not 50% decline today. Complete, total, absolute zero value. Something always goes up, though. Financial physics, nobody teaches you. Every banking crisis creates winners. Specific assets hold their value. Others make holders extremely wealthy. Today reveals exact 5 assets. Survived every major banking crisis. Real numbers, real verified data. No vague theories, just facts. Specific assets, specific performance reasons. What went to zero completely. Psychological traps destroy intelligent people. Framework protecting wealth requires decades. Financial historians spent lifetimes discovering. Framework comes before asset list. Survived doesn't always mean flat. Some dropped hard, then soared. 3 categories exist during crises. Category 1, assets go zero. Value rests on institutional trust. Trust evaporates, they become worthless. Bank stocks during bank runs. Mortgage securities in 2000. Derivatives built on fraudulent loans. Value depends on collective belief. Belief breaks, they become paper. Category 2 falls, then recovers. Dropped 30, 40, 50%. Something real exists underneath them. Persists after financial fever breaks. Blue chip stocks, quality locations, investment grade corporate bonds included, painful holding through crisis periods, but ultimately completely survivable assets. Category 3 holds or rises. Rarest category, most valuable assets. Stay flat while everything burns. Actually appreciate during banking collapse. Built this list studying crises. 4 crises, nearly century data. Great Depression, 1929. 9,000 banks failed completely. Financial system stopped functioning years. 2001 dot-com crash. 5 trillion market value evaporated. NASDAQ fell 78%. 2008 global crisis. Worst banking collapse since Depression. Lehman Bear Stearns failed completely. 2023 crisis. Silicon Valley Bank collapsed instantly. Triggered panic across regional banks. 4 crises, 100 years data. 5 assets survived all completely. Number 5, U.S. Treasury bonds. Sounds boring, like watching paint. Performance data, absolutely not boring. September 29th, 2008. House rejected Emergency Stabilization Act. Dow Jones dropped 700. Biggest single day point drop. Panic everywhere, trading desks chaos. Experienced traders visibly shaken completely. Treasury market showed something extraordinary. Investors flooding government bonds aggressively. 3-month Treasury, yields negative. People paid government holding money. Not earning interest, paying lend. Desperation for safety so intense. Rational people accepting guaranteed losses. Certainty principle would be returned. S&P 500 fell 30. Long-term treasuries gained 20. Stocks losing third their value. Treasuries delivering best years decades. Great Depression government bonds safe. Returned 3-4% exactly. Market crashed 40% same. Industrial stocks fell. Banks failed. Treasury holders got money back. Outstanding treasury bills, 12 trillion. November doubled to 20 trillion. Global capital flooded, seeking safety. Flight to quality happens repeatedly. Banking crisis, investors don't ask, how make most money today? They ask how insure money. Answer for institutional investors worldwide. U.S. Treasuries backed full faith. United States government controls currency. Never defaulted entire history completely. Unique ability print currency debt. Combination makes treasuries category themselves. Honest caveat treasuries, not perfect. 2022 inflation. Fed began aggressive rate hiking. Long-term treasury bonds lost. Worst year in U.S. history. Treasuries protect against banking crises. Not inflation crises, no difference. Banks failing own treasuries immediately. Inflation surging, calculus changes dramatically. Banking crisis, track record perfect. Number 4 will surprise you, not stocks. Crypto real estate, farmland survived every single crisis. Picture 2009 scenario, Bear Stearns gone, Lehman gone. Unemployment climbing toward 10%, people losing houses. Retirement devastated, financial media using catastrophe depression. Iowa farmer harvesting corn peacefully. Land worth more than year, beginning 2007 numbers. End 2009 verified. S&P 500 fell 50. Housing prices crashed across America. Bank stocks went to zero. Farmland returned nearly 30%. Not negative 30, positive 30. Dot-com crash 2001. S&P dropped 49%. NASDAQ fell 78%. Farmland generated 7% returns. NCRF, Farmland Total Return Index, increased 5 times 15 years, 10 times past 20 years, 20 times past 30 years, every recession crash banking crisis. Long-term trajectory relentlessly upward. Why farmland survives when others. 4 reasons worth understanding deeply. Reason 1, food demand inelastic. Demand doesn't change, Prices change. Food, ultimate inelastic, good completely. People stopped buying cars, homes, designer clothes, everything luxury stopped. But not stop eating meals. Demand for farmland output constant. Regardless, financial system doing anything. Reason 2, cannot manufacture farmland. Total productive agricultural land fixed. Build more skyscrapers, create products. Print more money, easily done. Cannot manufacture Iowa topsoil. Geological scarcity gives price floor. Factory produced assets cannot claim. Reason 3, zero correlation markets. Research shows farmland neutral negative. Correlation domestic equities emerging markets. Doesn't just survive crashes often. Moves opposite direction completely genuine. Few genuine diversifiers, available investors. Reason 4, perfect inflation hedge. Banking crises followed monetary stimulus. Central banks printing rescue systems. Printed money shows up inflation. Last 50 years, farmland returns. High inflation averaged 14%. Double average inflation rate exactly. Money becomes worthless food prices. Farm revenues rise, land follows. Honest part farmland historical scar. 1980s, farm crisis occurred. 70s grain exports boom substantially. Farmland values surged, farmers borrowed. High interest rates buy land. Paul Volcker raised rates 20. Till inflation, grain prices collapsed. Farm bankruptcies exceeded depression levels. Agricultural banks failed hundreds completely. Less than precise farmland, not problem. Farmland bought excessive debt peak. That was actual problem exactly. Unlevered owned outright farmland performed. Same asset, 90% debt. Became catastrophic liability, 80s completely. Asset survives, leverage creates risks. Remember that distinction, always important. Number 3, silver precious metals. Separating silver from gold because behave differently, crisis, understanding useful. April 2011. Numbers. 3 years worst banking crisis. Federal Reserve created $2 trillion. New money quantitative easing programs. Debt ceiling debated in Congress. Dollar under severe pressure globally. Silver hit 49 ounce, highest price in recorded history. Rewind October 2008. Absolute depths financial crisis exactly. Silver fallen $20.09. 55% crash weeks. Anyone bought September catastrophic losses. But here's what happened held April 2000. 11 months. Silver $9, 49. 444%. Crisis lows, crisis highs, 3. Pattern repeats every banking crisis. Phase 1, initial panic selling. Investors need liquidity fast, immediately. Silver gold fall hard, everything. Confuses people. Gold supposed up. Phase 2, true nature becomes. Obvious response involve money printing. Bailouts, currency debasement, precious metals. Accelerate dramatically, upward trajectory completely. Phase 3, new highs achieved. Assets survived, held through phases. Rewarded extraordinary returns, absolutely documented. 2008 numbers S&P lost 38.5%. Gold gained approximately 5%. Despite initial sell-off periods, silver fell, recovered explosively 9. Investors held physical precious metals. Entire cycle 2007 dramatically outperformed almost every class. Why precious metals survive crises. Answer 3 words, counterparty risk. Every financial asset has counterparty. Stock worth something company operates, bond worth something issuer pays, cash bank account worth something. Bank remains solvent, government backs, physical gold, silver sitting possession. Have counterparty, don't depend institutions, don't depend government promises anything. Intrinsic physical properties, connectivity resistance, corrosion density, rarity valuable industrial. Jewelry uses independent financial systems. Gold recognized valuable human civilizations. 5,000 years approximately documented. Bank run changes that fact. Honest caveat, precious metals not. Growth assets don't pay dividends. Don't compound, don't build businesses. 90s, terrible decade for gold. S&P returned 17% annually. Gold went nowhere 10 years. Purpose, gold, silver, not wealth. Good times preserve wealth system. Want growth, own equities exactly. Want crisis insurance, own physical. Number 2, gold expected number. Honestly, considered it seriously, but separated gold own section because. Crisis performance data so consistent. Well-documented backed institutional behavior. Demands full breakdown, complete analysis. Give numbers across every crisis. 1929, Great Depression. U.S. gold standard meaning dollar. Convertible fixed amount gold exactly. Banking system collapsed, thousands banks. People held physical gold protected. Specific, extraordinary way completely documented. 1933, President Roosevelt signed Executive Order 61, confiscating privately held gold, but simultaneously revalued gold $20, $35 ounce exactly, 69% increase overnight. People held gold, foreign coins, gold mining stocks exempt confiscation, saw wealth multiply bank depositors, Lost everything, failed institutions completely. 2001 dot-com crash. Gold began decade 270. NASDAQ lost 78%, March 2000. October 2. Gold barely moved, crash itself, essentially flat during period exactly. Federal Reserve cut rates aggressively. Dollar weakened, inflation fears built. Gold began greatest bull markets. 72,001. 1900 by 2000. 600% gain decade. Following dot-com crisis, absolutely verified. 2008 global crisis. Single most important data point. Modern era gold crisis, asset. S&P 500 fell 30. Real estate fell 30 nationally. Bank stocks down 60-70. Oil fell 147. Gold ended 2008, approximately 5% positive exactly, beginning 2007 through. End 2009 full. Arc crisis gold increased 60. Lehman Brothers filed bankruptcy September. Gold surged 900 ounce. House voted down bailout September. Dow dropped 770. Gold surged again immediately responding. Every moment maximum panic was. Moment maximum gold demand exactly. 2020, COVID-19. S&P dropped 34%, 33 days fastest bear. Gold briefly fell, initial panic. Investors needed immediate liquidity access. Within weeks, gold hit 2. First time history completely documented. August reached 2,080. Response 3 trillion fiscal stimulus. 4 trillion Federal Reserve balance. Exactly monetary environment. Gold thrives. 2023 Silicon Valley Bank collapse March immediately. Gold surged immediate response pattern. Within weeks, gold hit 2. Pattern repeated 1929, 2008, 2020. Repeated again, absolutely consistently documented. Why gold uniquely consistent always? Insight most gold analysis misses. Gold not just commodity exactly. Monetary asset, central banks themselves. Treat reserve most recent data. World central banks collectively hold tens, thousands tons gold exactly. Central bank gold purchases hit near record highs 2000, 22, 23, 20. China, India, Turkey, dozens other. Central banks aggressively increasing gold. Institutions create money, choose hold. Gold strategic reserve tells everything. Need no gold roll global. Every banking crisis since 2 met same response, print money. Every time money printed, massive. Purchasing power money erodes exactly. Gold cannot print it, exists finite. Maintains purchasing power, relative inflating. Not theory pattern. 100-year. Track record absolutely documented completely. Honest caveat, gold, no yield. Doesn't pay dividends, build businesses. Create jobs, Warren Buffett famously. Dislikes exactly these reasons? Exactly. Prefers productive assets, compound time. Right, normal times, purpose gold. Not normal times, purpose gold. Day Lehman Brothers, employees show, work badges, don't work anymore. Number 1, reframe, think crisis. Not commodity, government, bond, physical. Hold hand businesses, sell things. People cannot stop buying exactly. Consumer staples. Companies, specifically companies, manufacture, sell food, household necessities, basic medicine, personal care products. Think Procter & Gamble, Johnson & Johnson. Walmart, Coca-Cola, Nestle, Unilever. Prove why number 1 single, 2009 Bear Stearns. Lehman gone, Merrill Lynch sold. Unemployment 9.5% rising. Millions Americans lost homes exactly. Retirement accounts cut half completely. Procter & Gamble headquarters, Cincinnati, Ohio. CFO reviewing latest quarterly numbers. Tide laundry detergent sales up. Pampers diaper sales flat exactly. Crest toothpaste flat, Gillette razors. Slightly down men's stretched replacement. Not catastrophic, not zero flat. Worst banking crisis since Depression. Company makes soap toothpaste baby. Diapers barely noticed crisis impacts. Procter & Gamble did something almost. Other company did 2000. Raised dividend during crisis period. 2008 numbers. S&P fell 38.5%. Consumer staples sector tracked XLP fell approximately 15% exactly. Painful, but 15 versus 30. Difference bruised, broken bone completely. Consumer staples recovered new highs. Years before, broader market did. Dot-com crash, 2001. Technology sector lost approximately 80. Consumer staples significantly outperformed broader. Sector relative performance periods, stress. Most consistent patterns, modern investing. Why number 1 principle makes. Most powerful insight, entire list. Revenue stability, revenue unstable world. Rarest, most valuable thing, crisis. Every banking crisis creates same. Wealth destroyed, credit contracts, spending. Corporate revenues collapse across economy. Companies depend, discretionary spending travel. Luxury goods, entertainment, cars, restaurants. See revenues collapse, customers suddenly. Less money choose spend, less. Consumer staples companies sell things. Aren't, discretionary mother doesn't stop. Buying diapers, stock market crashed. Elderly man doesn't stop taking. Blood pressure medication. Lehman Brothers filed bankruptcy, family doesn't stop. Buying bread milk neighbor bank. Revenue stability does several things, matter enormously during crisis periods. First, allows consumer staples companies continue paying dividends almost every. Other company cutting, suspending theirs. Great Depression, handful blue chip. Consumer staples companies maintain dividends. 2008, Procter & Gamble raised dividend. COVID-19 Cola maintained dividend 58th. Consecutive year, increases absolutely documented. Second means companies can continue. Investing businesses, maintaining brands, improving. Products building distribution while competitors. Survival mode come out crises, relatively stronger than entered exactly. Third makes magnets, institutional capital. Professional fund managers need rotate. Out cyclical sectors, banks, industrials. Technology have put money somewhere. Consumer staples, stable revenues, reliable. Dividends, natural destination, institutional flows. Deeper insight elevates consumer staples. Above gold, this list exactly. Gold perfect, store value, passive. Just sits there, doesn't compound, doesn't grow, doesn't create wealth. Normal times. Consumer staples, businesses, all three things normal times. Grow revenues, expand margins, increase. Dividends compound shareholder value decades. Crisis times defend value better. Almost any other equity class. Dual functionality wealth preservation crises. Wealth creation good times makes. Quality consumer staples companies single. Most versatile asset class long. Investors want survive every environment. $10,000 invested S&P. Consumer staples index January 19. Worth substantially more today than 10,000 invested broader S&P. Same period because of the compounding effect. Surviving multiple crashes. Smaller draw. Continuing collect dividends throughout recovering. Faster. Each time absolutely documented. Honest caveat consumer staples. Not. Magic they fall. Crisis just. Less than everything else. Exactly. Can overvalued consumer staple. Offers less protection individual companies. Within sector can fail think. Retail chains couldn't adapt commerce. Sector principle holds individual stock. Picking within still requires judgment. Most important part of this video. Not what survived, what destroyed. Understanding what goes zero important. Understanding what survives, pattern psychological. Trap intelligent, educated people fall. Every single time repeatedly documented. Lehman Brothers, Bear Stearns Washington, Mutual IndyMac Wachovia, Silicon Valley. Everyone's stocks considered fundamentally sound. Professional analysts, months before collapse. Everyone recommended buy, hold multiple. Major research firms exactly documented. Everyone passed regulatory stress tests. Everyone management teams publicly expressed. Confidence their institutions, everyone went. Zero near zero when hidden. Leveraged balance sheets finally exposed. Pattern banks over-leveraged holding assets. True value deliberately obscured management. Prioritizes short-term performance metrics. Long-term solvency characteristics almost. Never visible outside until late. Less than financial institution offering yields. Returns significantly exceed what competitors. Because taking risks, competitors not. Bank balance sheet requires PhD. Interpret complexity, often feature not. Bug designed, obscure leverage underneath. 2008 crisis, ultimately. Crisis complexity weaponized against investors. Collateralized debt obligations, CDOs, instruments. Created bundling thousands individual mortgages. Slicing tranches, selling tranches, institutional. Investors worldwide, top tranches received. AOA ratings, Moody's, S&P, Fitch. AOA means safe government bonds. Rating they were given what? Pension funds, insurance companies told. They were buying many instruments, became completely worthless underlying mortgages. Defaulted rates mathematical models declared. Statistically impossible, those models wrong. Ratings wrong. Banks created products. New wrong internal emails multiple. Banks showed traders describing products. Selling junk crap while simultaneously. Selling them clients? Lesson cannot. Explain plain language investment makes. Requires complex financial engineering multiple. Layers, abstraction mathematical models cannot. Evaluate opacity should treated red. Flag feature complexity often there. Hide risk, Enron 2000. Named America's most innovative company. Fortune magazine 6 consecutive years. Stock hit $90 share. Considered blueprint modern energy company. Asset light technology forward aggressively. Growing fraud, most sophisticated accounting. American history that time company. Hiding billions debt through off, balance sheet, special purpose entities. Executives, new auditors, Arthur Anderson. Either knew, refused, look carefully. Find out when fraud exposed. Late 2001 Enron. Stock fell $90 less. Employee retirement accounts concentrated company. Stock wiped out retirees worked. Decades lost savings WorldCom followed. 2000 to 11 billion. Accounting fraud, zero lesson when. Company growth seems too consistent. Perfect too unaffected, broader economic. Numbers seem defy economic gravity. Consistency should prompt more scrutiny. Most extreme example, entire video. Important because reveals ultimate failure. Mode financial system, Weimar Germany. 1923, $1, worth 4.2 German marks. 1914, worth 4.2 trillion marks. November 1920. Wheelbarrow full currency, couldn't buy. Loaf bread workers paid twice. Daily because afternoon morning wages, worth half much people burned. Currency heat because cheaper than firewood people held German government. Bonds considered among safest investments. Europe before World War completely. Wiped out bonds denominated marks. Marks became worthless, bonds followed. People held farmland, still farmland. People held physical gold still. People held shares, productive companies. Sold things people needed survived. Argentina, 2001, Zimbabwe, 2008, Venezuela, 2000. Pattern repeats. Governments print money. Solve fiscal crises, credible mechanism. Stop them, currency eventually collapses. Paper assets, denominated currency go. Zero physical assets, real productive. Businesses, foreign currency, denominated holdings. February 2000, raised 80. Million investors, mascot sock puppet. Dog famous enough appears super. Bowl advertisement 9 months after. IPO filed, bankruptcy, stock went. Zero company viable business model. Revenues never cover costs, hundreds. Companies followed SAME path earnings. Often revenues, sometimes products, but had stories about future, about internet would change everything about. Traditional metrics didn't apply about. Growth all that mattered people. Lost money these stocks weren't. Stupid pattern matching real innovation. Internet did change everything but. Confused importance technology with investability. Specific companies most value created. Internet went, companies didn't exist. 2000 same pattern repeated. Crypto crash, 2020. Hundreds tokens intrinsic value revenue. Path profitability went zero while Bitcoin least scarcity first mover. Network effects survived pullback. Give unifying principle behind 5. Assets survived, 5 categories went. Assets survive banking crises, share. Fundamental characteristic, have value exists. Independent institutional trust farmland grows. Food, whether bank solvent, gold. Physical properties, whether government functioning. Consumer staples. Companies sell necessities, whether credit markets, open treasuries. Backed entity controls world reserve. Silver industrial uses. Persist regardless. Financial panic assets go zero. Share opposite characteristic value institutional. Bank stocks worth something long. Everyone believes bank solvent structured. Financial products worth something long. Mathematical models trusted fraud worth. Something long fraud undiscovered currencies. Worth something long confidence issuing. Government holds banking crises there. Core confidence crises, moments when collective belief, certain institutions, instruments, safe, suddenly breaks down everything. Value-built belief gets destroyed. Everything value exists independently belief, survives. Framework explains not just past crisis discussed today gives. Lens, evaluating any asset, any. Future crisis. Ask yourself, trust. This particular institution, government, financial. System collapse tomorrow, would asset still have value? Answer, yes. That's survivable. Asset answer, that's bring this home, 5 assets. Survived every major banking crisis. Past century number 5, Treasury, bonds world default flight quality. Destination when institutional panic strikes. Number 4, farmland, scarce productive, inelastic. Demand negatively correlated financial markets. Number 3, silver precious metals. Physical assets, counterparty risk explode. Upward after initial crisis panic. Number 2, gold 5,000. Year store value, central banks. Themselves hold preserves purchasing power. Every time, governments print money. Rescue broken financial system number. Consumer staples, businesses, companies selling. Necessities people cannot stop buying. Revenue stability protects dividends, compounds, shareholder value across every economic. What went zero, anything depended. Institutional trust have value bank. Stocks built hidden leverage complex. Financial products designed hide risk. Mathematical complexity. Corporate fraud looked. Genius until didn't currencies printed. Worthlessness, speculation, confused investment Lehman. Brothers employee arrived work September. Found security badge, didn't work. Didn't fail, system failed them. Many had life savings Lehman. Stock because believed institution worked. People survived crisis financially, not. Smarter, luckier, had allocated portion. Wealth assets value not depend. Lehman Brothers. Remaining solvent, that's whole lesson. That's entire framework. Don't need predict next crisis. Don't need time markets, just need own assets, survive every crisis, avoid assets, entire value. Rest belief time, nothing wrong. Something always goes wrong eventually. Thank you for watching our analysis. Please share your thoughts below. Subscribe for breaking news updates, turn on notifications for alerts, like this video if informative. Comment your analysis and predictions. Share with friends and family. Stay informed about global developments. Follow us for exclusive content. Your engagement helps our journalism.